FANG stocks getting bitten today. Apple dropping almost 2%, selling off with the rest of tech. The stock is now trading below its 200-day moving average. Amazon also down, falling nearly 2.5% today. That stock also dropping below a key technical level. It's now trading 0.5% under its 50-day moving average. So will these tech titans keep going lower? Let's bring in the Chartmaster, Carter Worth, to find out. Carter?
Well, so what we know about Apple, of course, is that it bottomed after the market, right? The S&P low is mid-October, and Apple is lagging, underperforming, and then bottoms in the first day of January. Now, its rally off the low was quite a bit more robust than the rally of the S&P, and yet all it was is a ricochet. I think Apple is not something to be in right now, and frankly, it doesn't have a lot of opportunity to the downside. Sometimes an asset is fair price. I would call this a pair of twos. Don't be long, don't be short. Just look for something else that's more timely, more interesting, more dangerous, or more exciting. This is a dull duck.
Is Amazon any of those things?
More dangerous. Yeah, more dangerous, right? So Amazon, just consider this. I mean, how many stocks are basically at or very near their COVID lows? Not
too many.
And that's right. The S&P is up 80% off its COVID low. And this stock is very close to its COVID. One could say, well, what about all things like Peloton? Well, those are small companies. There are no very large companies that have had this kind of trouble. Still expensive. I'm sure Mike can speak to that or anyone else. But this is worse. Amazon's more worrisome than Apple.
Is it fundamentally the case for lower Amazon price to you?
Yeah, I mean, look, first of all, we go back over the course of the last couple of years. We had an epic, basically, opportunity for retail, and yet Amazon didn't really participate in that. And some of the news out of the businesses where they have secular growth stories, in theory, also haven't been doing that great. And that just doesn't seem like a great recipe. When you take a look at a name like Apple, it would be a better place to be when you think about it this way. It's not a long duration, betting on a long-term future kind of a name. The valuation isn't huge relative to the market, but I think people need to remember that when there was a view that this wasn't going to really grow, and right now EPS isn't really growing. I think that's an important thing to remember here. This thing has not really traded at a great multiple either. I mean, this thing traded down to 10 times earnings once upon a time. So, to me, I don't think there's a whole lot of harm in Apple. I mean, it continues to generate massive free cash flow. But the upside isn't there anymore either.
This is why I like talking to you guys. All the sell-side analysts love both of these stocks.
Yes, they do.
Not so much here on the desk, Jeff. What about you? Apple, Amazon, neither?
Yeah, I feel like Apple's been the stock that's been the bear market barometer for the better part of 12 months. It's levitating, and I think that means there's probably more to go for the overall market. And I think everybody got really excited that Apple recovered. Carter said it more so than the broad market. But at the same time, if you look at the chart, not that much has really changed. It continues to make lower highs. It's now just back below that 200-day moving average. And Mike said it, the PE's 23.5 times. Earnings not necessarily growing at a pace that will support that multiple, and I worry that earnings deteriorate even more as the consumer starts to get hurt at the latter half of this year. So I would look to 140 as the next test. That's that rising 50-day moving average, but I think there could be more downside even below that.